You ever see one of those offers that just seems way too good to be true? And for a second you wonder, could it actually be legit? It's a question as old as money itself, really, because financial deception, well, it's not some new invention. It's more like an art form that just keeps finding new ways to trick people.
Let's just go there for a second. Imagine you find this amazing investment opportunity. It's promising these incredible, steady profits with basically zero risk. Now your logical brain is screaming, no way, but the person selling it is just so convincing. You're even seeing other people get paid out. All of a sudden that promise of guaranteed profit starts to feel real. But what if the whole thing is just smoke and mirrors, an illusion built on nothing at all?
To really get this, we've got to go back to the guy who literally gave the scam his name, Charles Ponzi. Back in 1920, he wasn't just selling some investment, he was selling an absolute dream. We're talking a 50% return in just 45 days. His secret? A supposedly genius plan involving international postage coupons. And as those first investors got paid, the word spread like wildfire. Money poured in, and Ponzi became this huge Boston celebrity. But here's the thing, there was no genius strategy. It was a complete house of cards. And by the end of the year, it all came crashing down, wiping out thousands of people. Ponzi's story is basically the blueprint for these scams, and today we're going to expose how those old tricks are still being used. Welcome to everything you need to know about finance. Now, before we dive deeper, just a quick heads up, this is purely for educational purposes, it is not financial advice. And hey, if you find this kind of content valuable, a quick like and subscribe really helps us make more.
So, what exactly is a Ponzi scheme? The definition from the U.S. Securities and Exchange Commission, the SEC, really nails it. Forget all the complicated financial jargon. At its heart, it's an investment fraud where money from new investors is used to pay off the early ones. The organizers aren't investing your money in anything real. They're just shuffling cash from one person to another. The whole operation depends on a constant flow of new money just to keep from imploding.
And they almost all follow this same predictable life cycle. Step 1, the lure, that irresistible promise of huge returns with no risk. Step 2, the illusion. The scammer pays out those first investors with cash from the next group, which creates this powerful image of success. And that fuels step 3, the deception. They send you fake account statements showing your investment is skyrocketing, which encourages you to keep your money in and maybe even invest more. But the whole thing is a ticking time bomb. The collapse is always inevitable. It happens the second that new money slows down or when too many people try to cash out at the same time.
What's so wild is that Ponzi's playbook from the 1920s still works today. You know why? Because it taps into really basic human emotions, hope, and maybe a little bit of greed. But here's the good news. Once you learn to spot the psychological tricks they're using, the whole illusion just falls apart. Knowing these red flags isn't just a good idea, it's your absolute best line of defense.
Okay, let's start with the big one. The absolute #1 sign something is off. There's a fundamental law in the world of finance. Return is always tied to risk. Period. Any investment that offers you higher potential returns has to come with higher risk. So, if you ever hear the words guaranteed and high returns in the same sentence, a giant alarm bell should be ringing in your head.
Think about how the real market works. It goes up, it goes down, it's messy. So when an investment just spits out positive returns like a machine, month after month, no matter what's happening in the global economy, that is super suspicious. Real investments have bumps in the road. A perfectly smooth line going up on a chart, that's not usually a sign of a genius. It's often the signature of a total fraud.
This one is a really simple check that could save you a ton of grief. Legitimate financial advisors and the products they sell have to be registered with government regulators like the SEC. That's not just red tape. It's all about transparency and making sure someone is watching over things. Ponzi schemes almost always use unlicensed people to sell unregistered products for one simple reason. They want to stay in the shadows, far away from anyone who might ask tough questions.
If you ask how the investment works and you can't get a clear, straight answer, just walk away. Scammers love to hide behind complicated jargon or claim their strategy is some kind of proprietary secret. They do this not because it's brilliant, but because it's a tactic. It's meant to make you feel dumb and stop you from digging deeper. Just follow this rule. If you can't explain it simply to a friend, you probably shouldn't be putting your money into it.
This right here is often the first crack in the dam. You ask to take out some of your profits, and suddenly it's all excuses and delays. Or maybe they try to tempt you with an even better return if you just roll it over and keep it in. This isn't a customer service problem. This is a massive red flag that the cash flow is drying up and the scammer just doesn't have your money to give you.
All right, let's pull all this together into a quick mental checklist you can use. You just have to ask these questions. Is it promising high returns with no risk? Are the profits just too perfect, too consistent? Are the seller and the investment actually registered? Is the strategy some big secret? Are there problems with your paperwork or issues getting your money out? And finally, are you feeling a ton of pressure to act now? If you're nodding along to even one of these, you need to hit the brakes, hard. Think of this list as the basic DNA of financial fraud. And that same DNA, it pops up in other scams too.
Like its very close cousin, the pyramid scheme. Now, people mix these two up all the time, but the difference is really important. A Ponzi scheme is centralized. It's faking being an investment service. A pyramid scheme, on the other hand, is all about recruiting. You are the one who has to go out and bring in new people, and that's how you get paid. Because they need to grow exponentially, pyramids tend to collapse incredibly fast. A well-run Ponzi, though, can actually last for years. And it's this basic model, using new money to create a fake reality, that is adapted so perfectly to our digital world.
The modern version of a boiler room isn't some shady office anymore. It's right there in your social media feed. Think about pump and dump schemes, where anonymous accounts create a huge storm of hype around a worthless penny stock. This lets them sell at the peak, while everyone else is left holding a useless investment. Or influencer scalping, where a so-called trusted influencer hypes up a new crypto coin to all their followers, only to dump their entire holding right after their followers buy in. And then you've got the completely fake platforms, these slick websites with fake live trading charts, designed for one thing and one thing only, to get you to deposit your money so they can disappear with it. So now that you know what these modern traps look like, let's talk about building up your financial shield.
Protecting yourself really comes down to just a few powerful habits. First, be incredibly suspicious of any guarantee. Second, always verify. Use official regulator websites to check on both the person selling and the investment itself. Third, don't invest in things you don't get. If it's a black box to you, stay away. Fourth, fact-check everything. A hot tip you saw on social media is not research. And finally, just ignore offers that come out of the blue and push back on any tactic that pressures you to act now. A legitimate opportunity will still be there tomorrow.
This quote here really gets to the heart of the new frontier for fraud. Scammers absolutely love to operate in the Wild West. And right now, the Wild West is new technology. Things like cryptocurrencies and what are called initial coin offerings, or ICOs, move so fast that the laws and regulations are still trying to catch up. And that lack of clarity, it creates the perfect gray area for scammers to do their thing.
And you can see this change happening right here. Yeah, high-pressure phone calls still exist, but the modern scam really lives on social media and with influencers. The next wave is even more slick, using the language of tech and innovation as a disguise. We're seeing things like fraudulent ICOs and even smart Ponzi's, schemes actually built on blockchain technology to create this false sense of security. It's the same old trap, just dressed up in a shiny new digital costume.
So, where does all this leave us? As the scams get smarter and hide behind fancy algorithms and new tech, our most basic defenses actually become even more important. Those promises of easy money, the appeals to secrecy, the pressure to act right now. Those things never change. The technology will always evolve, but in a world where the scams are constantly changing, maybe our greatest asset is just a healthy, informed dose of skepticism.